going on, everybody? Gonna get started in just a minute. Gonna go ahead and invite in our speakers for the evening. Let's go ahead and get stock talk. Okay, I shot out some invites to our speakers, so we should be starting pretty shortly. I went ahead and just started it a minute early so people could file in, hang out, all that good stuff. Okay, I'm also going to put out a tweet, and we'll get this going. What's going on, Joey?
Hey, what's good, man?
Doing good. What have you been up to?
Not much. Got classes and stuff. I got some work done. Another roughish, crazy day in the market. So same old here as of late.
Makes sense. Yeah, it's definitely been interesting times as of late. Real quick, I'm just going to put out this tweet. Join up now. And just let people know that we are live. Okay, what's going on, JC?
Another day, another dollar, man. Just trading, chilling, relaxing, watching energy go through the roof. Everything else having a problem. It's been an interesting day. Kind of excited to get into tonight.
Yeah, definitely, man. I think it's going to be real interesting, especially with FOMC coming up tomorrow. I think we're going to get a lot of opinions. What's going on, Ben?
Hey, Gov. How you doing? Doing good. Here, impromptu last-minute vacation in Florida. I drove past that. You guys remember that Surfside building collapse last year? You probably do, right? But I drove right past that empty lot. It was kind of creepy because we're staying like a mile from there. So, but still working, man. No rest for the weary.
Yeah, I actually stayed actually like a mile or two away from that for all of December. So yeah, I was right down there. I miss Miami.
Oh yeah, where were you down there? In Miami Beach?
Yeah, I stayed North Beach.
Okay, yeah, I'm in Bell Harbor. Pretty cool.
I was literally
nice
in
area.
Surfside. Yeah.
Right. Yeah.
So I was there. But yeah, it was interesting times. You know, I got to explore. Okay. All right. What's going on, Danny?
Nothing much. What's going on? Everybody see Microsoft's earnings?
The down.
Oh yeah. What's going on, man?
Oh yeah. Nice guidance. I think that bodes well.
Yeah, quite the reaction there after hours. Okay, I just went ahead and I pinned the tweet. If any of my speakers could let their audiences know either via that tweet or share your own tweet or whatever you'd like, just let your audiences know that we are live. I would deeply appreciate that. What's going on, Andrew? Welcome back in.
Thank you so much, man. It feels awesome to be back. I'm pumped.
Good to have you.
Was that to me? Sorry.
Yeah, no, that was to Andrew. Sorry, my AirPods are being super
weird. What's going on? You were cutting in and out there. What was that?
Yeah, I was. All right. Hopefully you can hear me now. I just hopped off of Wi-Fi. Yeah, just seeing if you were all good and back to it.
Yeah, I'm actually feeling a lot better. I would say I'm at like 80%. Had a surgery last week, so I actually missed like a lot of the craziness in the market last week, which I guess was pretty good. But yeah, now I'm basically back in the full swing of things and back on my daily routines, which is good. I still need like one more week to work out, though.
Yeah, God works in mysterious ways, man. All about that timing. Okay, and Vegas, how's it going?
Oh, it's not bad. Look forward to our chat tonight. I look forward to hearing what the panel has to say, and look forward to sharing some commentary. Thank you for asking. Hope everyone's having a good night so far, and thank you for asking. And to all the listeners, thank you for joining us tonight.
Perfect. Okay, we got over 150 people in here, so I think it's time to go ahead and get started with the show. So welcome back in, everybody, to our regular Tuesday evening space that we do, market sentiment and stock picking. I'll be doing my best to track the stock picks once we get to that part. But first, to everyone's familiarity, we're going to go around. Each speaker will weigh in on current market sentiment. We do about 4.5 minutes max on this section, for each speaker. So we'll just keep it, straightforward to the point. I think we're going to hear a lot about, stuff like the FOMC. We'll hear about the past few days, how we've had these major dips and upward. We'll hear about moving averages. If you do have any questions during it, I recommend either you can go ahead and you can drop them under the pinned tweet, where I will see them there, or you can DM them to the speaker of your choice. And I'm sure if you reach out nicely and all those things, that you'll probably get a response back. With that being said, let's go ahead and get things rolling. Mr. Danny Nas, would you like to kick us off?
Sure thing. Thank you for having us, and it's always good to be here with my FinTwit friends. 8 p.m. Eastern Standard Time, Tuesday night, same bat time, same bat channel. Yeah, listen, I think it's gonna be tomorrow's gonna be pretty interesting. I think we have our typical morning, day trading ball cap on, no big deal. But I think we're gonna hit a lot of choppity chop at around 1 o'clock, 1 o'clock Eastern, and then the fireworks will begin. So I think 2 p.m. we got FOMC. I think 2:30 they usually release minutes. I would just be a bystander at that point. I think we'll have some wild swings. I think there'll be some fake outs. Where we end the day, I think that's anybody's guess. Early news out is that they're going to be raising rates and they're going to be talking about that. So whether that is priced in, I think that remains to be seen. I do think we hit a temporary bottom. We had a little bit of a capitulation candle yesterday. We had a pretty wild inside spinning top on the daily on SPY, similar on the Qs. I think, like I said, this is going to be indecision day tomorrow until FOMC. So just be careful if you're day trading. I think it's good to take those morning trades, take your quick profits, and get out. But outside of that, it's wait till 2 p.m. and let the fireworks begin. We did have a little bit of good news post market. We had a wild swing. Microsoft down to the downside, right back to the upside. It's only down, I think, about 1% now, but their guidance was actually really good. So I think that bodes well for Apple, and we'll see what happens with Tesla coming up on Thursday. I think Apple tomorrow, and I think this is going to be very interesting. I still feel like even if we have a move to the upside after FOMC tomorrow, I just have this sneaking feeling that we're still going to see a flush to the downside at some point in the next couple of weeks. Don't think the downtrend is done. I do think we will see a wave 4 pulling back up, maybe into the 440 to 450 region. And I think that's where we'll see our next flush down. But that's just looking at it from a wave perspective. But, outside of that, we'll talk a little bit about individual names, but sector-wise, energy still looks really good. Defensive contractors look pretty good in regards to the the noise on the Eastern European front with Russia and Ukraine. So there's always going to be this additional noise outside of the normal ebbs and flows of the market that we've been seeing. So and we'll see what happens with Omicron as the spring comes into March. But I think tomorrow, all eyes on FOMC. Let's see how they guide in terms of the rate hike potentially for March, and we'll take it from there.
Perfect. Thank you, Danny. And so I'm getting word that the street is going to go live at 2:30 EST tomorrow, instead of the normal 3 p.m. space that we do with them. I'm thinking I'm probably going to start at 2 p.m. space. I actually was supposed to have a meeting with Ben. Shout out StoryTrading. However, we actually pushed that meeting back so that we could do a 2 p.m. space and be live for live commentary during FOMC. So open invite to all my speakers up here for 2 p.m. EST tomorrow if you want to come live with us and trade during the FOMC announcement. So that goes out to all of y'all. All right. With that being said, let's keep it rolling. Vegas, would you like to go next?
Sure. A lot of volatility up and down today. And again, similar comments to what Danny was saying too. Obviously we know with the FOMC meeting, and really it's just going to come down to Jerome Powell's presser. What is he going to say? Choice of words. Even in the previous FOMCs, I recall, market already kind of knew it was what they were expecting. We saw the market, start going up, and then all of a sudden when he did his presser, whatever words he used, all of a sudden there was a pullback. This is going back a couple FOMCs ago. So again, it really is going to come down to that. So I'm just going to be, a bystander like everyone else, have very biased and very unbiased actually, and just wait and see like how does the market respond? How is the market going to react? And then, trade accordingly and just, manage risk and my exposure as well, because anything's possible and it can go in either way. So it could be bearish, could be bullish, or it could become bullish, then go bearish, or then flip and flop. So I'm just gonna, observe and then wait to see the participant respond, and then I guess go from there. So I'm just gonna be, like an observer, and then I'll decide which way I'm gonna go as well.
Okay, thank you, Vegas. All right, Andrew.
Yeah, what's going on, guys? Thanks so much for having me on. It is awesome to be back. Oh my gosh, we have so much to talk about tonight. So the indices, they're clearly all in downtrends right now. We have the S&P 500 is down about 10% from the highs. NASDAQ is down like, I believe it's 14. We have the small caps down 20. This is pretty insane price action that we're seeing. And these corrections in a typical market, they're just so normal. Like a 10% correction is like, it happens, a couple times a year, or at least once a year. Over the past couple of years, though, since COVID, we're just not really used to them anymore. So I think everyone is like really freaking out over this correction. I'm seeing a lot of signs that I think this is a tradable bottom. And that's how I'm positioned heading into tomorrow. I think there's a fantastic edge to get long the market, or at least add like some incremental exposure here, because the markets are incredibly oversold. They're all trading below the lower Bollinger Band. So from a technical standpoint, a bounce definitely makes sense. And then we have positioning, which is so ridiculously bearish right now. So I'm sharing in the nest this post by Jesse Felder. Everyone definitely take a look at this. And it shows you the amount of put buying we've seen amongst retail traders on Friday and Monday. And literally, we surpassed the record from the coronavirus crash. So the way that I see it, we had two big potential tail events, because the market really is in like a precarious spot. We have negative dealer gamma that's exacerbating these moves, and really everyone's on their back foot. Everyone's getting liquidated. But with all of this put protection that retail traders are putting on, I think it's highly unlikely that, everyone buys puts and then the market just like crashes, and I guess like everyone gets rich, and like, that's the way it goes. Usually when you start to see these huge extremes where everyone is leaning to one side of the boat, that gives a really good edge in terms of hitting the other side. So that's what I'm doing. And then also we got a dark index print today of 47. So that's a huge dark index print. If you back test that, readings above a 45 back test very well for forward 1 month returns. The only thing I was super worried about tonight was the Microsoft earnings. I looked through the earnings, everything looked good. Microsoft was down a couple percent in the after hours. And to me, that's not really even that big of a deal. It's pretty normal for a mega cap tech stock. They report earnings, they're down a few percent. It's not really the end of the world. But then when they showed their guidance, now Microsoft is basically flat. So that's basically like a huge tail risk that's now off the table. And now we have FOMC tomorrow, and everyone knows what Powell is going to say. Like, he's going to talk about the rate hikes. He's going to mention the balance sheet roll off. But at this point, everyone has freaked out over, what Powell's going to say. Like, I think it would be really difficult for him to say something that like catches everyone by surprise at this point. And yeah, we have the VIX super elevated at like a 31. So I think what could end up happening is, we go into the Fed meeting. Powell says these things that are kind of hawkish, but everyone knows what he's going to say. And suddenly, like, everyone has put protection or hedges that they all need to unwind at the same time. So unless Powell says something like, hey guys, like, here's a 50 basis point rate hike. By the way, we're going to start unwinding the balance sheet today. I really just think there's going to be a lot of short positioning that has to unwind. And then the other thing I'm noticing as well, just to like add to this edge, is over the past 2 days, Bitcoin is actually green while the market is still kind of languishing. And crypto tends to lead us, to the upside and the downside. So I'm just seeing like all these sources of edge that are all kind of just like stacking against each other. So I think things look pretty grim out there. I think sentiment's really bad, but I'm actually very excited to take some swings into the end of the week. And then I think if we get a nice pop into the end of the week in this market, I'm just being super tactical. So I think from there, if there's some easy money made over these next couple days, then I really think you have to just reevaluate. But yeah, I really like this setup.
Perfect. Thank you, Andrew. Well, I'm excited to see how you will be playing it once we get to your picks based off of your current sentiment. Awesome. Okay, let's keep it going. Money Mel, would you like to go next?
Hey, I'm finally on. Sorry, I had a little bit of a delay. Just kind of feel the same way that Andrew does, kind of the setup going into the FOMC tomorrow, which is a known bigger event. I do find it extremely interesting that one of the largest in the money VXX positions today appear to have closed out that call side flow. So they were in the $20 VXX calls expiring this week. And we know that there's been heavy positioning that we've seen for the last few weeks ahead of this event. And the open interest on that strike and expiration, 23,000 contracts, and it looks like they've closed out 22,000 contracts, and that's a 8.8 million in premium that we saw come through. And what was really neat to see, because we're watching options flow in real time, was once they started to unwind that and go bid side, that's when you had the pops in the market and we started to lose some of the volatility, which led to some upside moves after being really tight, frustrating chop and consolidation. And I think something that's worth noting is it's still a challenging market. And so even if you're looking at trying to long something because you're seeing some of that upside with elevated VIX, those contracts are priced based off of the VIX. That's a part of the pricing of your options contracts. And so those are very high comparatively, and you don't necessarily get that same move. If we're dropping in the VIX and that volatility is coming out, that volatility is coming out of your contracts, especially if you were shorter dated. So trying to get that quicker, easy move with some Momo and some call side options, when you're dropping that VIX, you don't necessarily get that same premium boost. So that could be frustrating, especially, like I said, if you're playing same week expiration. Something that I'm noticing from an options front, and one of my personal mentors that's been trading for 20 years, manages a very large account. So this is not when you see institutions buying calls, and it's absolutely true. If you're somebody who reads options flow and tape, we're not seeing the same momentum flow that we would typically see. What we're seeing is more deep in the money positioning if they are going to be looking to go call side, because that protects their delta. With that being said, what we are seeing is a lot more put writing, and that's not something that most people are familiar hearing or seeing as it comes in. And essentially what they're doing is taking advantage of an elevated VIX to be able to write those options, collect that premium. So we are noticing some of that, I would say, more so than we are some of that call side. So just kind of a little tip there, and caution, especially if you're looking to trade, weekly calls. If we really start to drop this VIX, those call options are still pretty elevated, that you don't necessarily get that same percentage move that you would have seen before, because we're just really elevated.
Okay. Yeah, that's interesting to hear with people closing out on the VIX, and just seeing the direction that the money movement's in. And again, similar to Andrew, will be excited to hear how you will position yourself going into the rest of this week, or the picks that you'll be making based off of the way that you are seeing the money flowing. Awesome. Thank you, Mel. Okay, Ben.
Hey, Gav. Great comments so far. Nice positive comments from Andrew. I enjoyed that. Money Mel, that's selling puts, one of my favorite things to do. So absolutely, that's a great way to make some money. So I want to first acknowledge that there's been a lot of pain out there. I know a lot of your listeners here, they're hearing all this positivity, but a lot of them may be washed out, man. I know people with years, even decades of experience who got clobbered here the last several months, down 70, 80%, because they were mostly in growth stocks or risk assets that were going up with RK in the last couple of years. So I just want to share a couple words of positivity for those people impacted. First, I want to tell you, I just love huge corrections like this. I love market downdrafts, even if I'm losing money. Like I talked to you guys last week, I'm usually like 100% invested net long. And I saw this coming 2 months ago. I went to like 90% net long. I started hedging a little bit, right? And my take on during times like this is I still want to hold the companies I love, but my focus here is not to make money. It's simply to outperform the market, because that's when you make real wealth, right? Because if everybody's making money and you get inflation, then nobody's making money, right? It's all about your buying power of your money. And in a huge downdraft like this, where wealth is just being, disappearing by a lot of people, losing a ton of their money, if you can outperform them, you're way ahead of the game. So that's my strategy. Is I've been in hedges for like 2 months, whether it's PSQ. I've been rotating different hedges like SARK, shorting ARK, PSQ, RWM. I added in this past week. I started diversifying my hedge because I'm not kind of sure where the market's going to go. So I added bonds and gold. I noticed gold has been acting really well. And shout out to Vegas, who was pointing out the money flow in gold last week on our show. So I added some GLD. It's been performing well. That makes me sleep better at night because, I don't know exactly what's going to happen to the market. And if I'm going to have a 10% hedge, I want it to be a diversified hedge with these different ETFs. So yeah, just focus on outperformance, right? I know a lot of people are maybe traders here. They're trying to make money every day. And, and if you're stepping aside from the market, that's great. Maybe that's what you should do. But for someone like me that's usually fully invested, I'm just focusing on outperforming. That's point number one. Also want to just remind everyone, this is a marathon, not a sprint, right? This too shall pass. And if you didn't play it right this time, learn from it. You'll play it right the next time, right? I look at everything as a learning experience, and I have no regrets over any of my past experiences. I went through a lot of pain, made a lot of money, lost a lot of money, learned a lot of lessons, and I just love the experience and I love learning. So just look at this as a learning experience. I want to reiterate what I said last week. I was brushing up on the dot-com bust, and we had that dynamic in April when taxes were due. That was a killer week, that week of April 15th. The market was down like 10 or 11% in a week. And I think the last day of that week alone was down 7 or 8%. And this was already after markets had a huge downdraft. And the dynamics behind that was people had to sell their assets to pay their taxes. And I really fear with, the great year people had, in a lot of people, not necessarily everyone, but a lot of people had a great 2021 still, and then they may have lost all their money. This personally happened to me in 2015 and 2016. I was making 10% a month. I couldn't lose. I was absolutely on fire. And then I had a huge tax bill due at the, after January 2016. I said, hey, I'm going to owe several $100,000 in April. And I said, man, I can't lose. Why should I set aside that cash? I'll just make more 10% a month till April 15th and pay my bill then. And I got into a situation where basically I lost everything and I had to pay the IRS in a loan over many years. And finally I came back from it, learned a ton of lessons, and I'm like 50 times in wealth, more than back then. So I think that might happen on a huge scale this year. So that's something I'm holding in my back pocket and kind of waiting for April. Depending on the price action going into April and mid-April, that's an opportunity I might want to take advantage of with, some risky bets or, triple levered ETFs or puts or things like that. That's a week I might play, but it'll depend on the price action going into it. If I have time, I want to, before we get into the stock picking, I just want to quickly, let me get my charts. I'm just going to tweet out the indices, because the second half of the show I want to talk about individual stocks. So let me just grab that tweet here. Here it is, and I'll pin it to the top. So I'm kind of looking at the big picture here. I'm trying not to get lost in the minutia of, hey, did Microsoft beat, did they not? To me, like, moving averages are really key. I look at them all the time. They work for me. Everyone has to find like different technical indicators, but for me, 20, 50, 200 day moving averages work great. And I have a rule of thumb. If they break, you switch to weekly candles and you start looking at the weekly moving averages. And these charts I just posted for RK, SPY, and QQQ are the weekly moving averages. And some of these violations look really, really ugly, right? So I'm just saying, based on especially for SPY and QQQ, I actually talked to you guys last week that I had a trade of going long ARK if it hit the 200 weekly moving average, and I did that. I started buying ARK calls last Friday. It violated it, but I averaged down on Monday, and I've been making great money on it. I started shaving off as it went up. But I'm still short NASDAQ with PSQ, and I'm not really worried about those Microsoft earnings. Yeah, we may get a bounce, but I think there's a possibility. I'm not saying it's definitely going to happen. Listen, I'm an optimist. I'm 90% fully invested. But because I'm trying to outperform, I'm comfortable still holding that 10% hedge, still holding PSQ to short the NASDAQ, because I think longer term, over the next several months or the balance of the year, we could see much lower levels in both SPY and QQQ. And, usually markets don't bottom until the interest rates go up, right? You're going to have that volatility. They talk about it, but that's not enough. Once they actually raise the interest rates, maybe that's the time you see a bottom. But the technicals, to me, if you talk about a correction, like a 10% correction in the NASDAQ or the SPY, but if you look at it relatively speaking to the last 5 years, that's like nothing. You can barely see it. It's just like a little blip. Like right now, it's starting to maybe look like the beginnings of a correction. Now it's breaking below some of the key weekly moving averages. But when you've gone up so much, so fast, really, what is 10%? So, I don't know. That's something I'm wary of. So I'm holding on to my 10% hedge. And the last thing is, we'll on the second half of the show, I just want to say, hey, there are still stories out there which work. Even in this terrible market, it's story trading. We focus on our 4 pillars. And there are individual stories where if the fundamentals and the catalysts and the sentiment are all aligned, it can buck the trend of the market. And I've been focusing on that with some of my trades and swings. So I'll share a couple of those ideas with you on the second half of the show.
Perfect. Thank you, Ben. Appreciate the insight there. Yeah, good points with just trying to, outperform what it is currently. Don't need to make all the money in the world. Even, just starting out January, we've had a very, very rough start for SPY. So plenty of people are going to be down, but it's just, not getting crushed. Absolutely. And then also, yeah, certainly continuing to look for opportunity, but understanding, I agree with you that after that huge rush upwards, there could be more space downwards. Okay, let's go over to Juicy.
What's going on, everybody? I'm going to throw my chart right at the top here, and I'm going to pull it up over here on my end, too. Just want to say thanks for having me on. As always, follow everybody here. But, man, for me, I've been finding extreme success just playing the short-term day trading side. Like, my day trader hat is in full effect. We out here killing it. I was short SPY pretty much at the open for a quick scalp. Then I got on Spaces, and I was live on Spaces, and I got long SPY, and I rolled that back up in the second half of the day. And this energy's buzzing, man. It's going nuts. If you tune out to these yearly charts, don't get me excited. These yearly charts on energy are insane. These quarterly charts are insane. There's a lot of room to go up in energy. My trader today was XOM. But looking at XPY, we went inside after this buyback hammer, right? So everybody in the world, including myself, was expecting that break of that 440.47. If you caught that break, you would have had a reversal in play, and then you could have tried to take that back up to that 448.10. which was higher day from that 121. So we went inside. So the way I'm looking at it tomorrow, I got to kind of agree with my man's Andrews over here and Mel. You got a lot of people who are still short, and you got an overextension. Like everybody's bugging out. Like if the market was upside down, if you take your computer and turn it upside down, everybody it would not be a problem. Everybody would be just walking around happy as crap, right? Because the market's down, it's a problem. But this is part of the game. Markets are going to come down. SPY, honestly, when they say stonks go up on the long term, if you take a chart out of SPY, like Story was saying, you wouldn't even see this. This is like a little blimp, right? So for me, yesterday I actually bought a ton of shares of SPY. My biggest core position is SPY. I have a ton of shares, and I keep buying more. Let it dip. I'm going to buy more, and I'm going to start to rotate when I turn 40 out of these shares. But tomorrow, the way I'm playing it is if we break above that 439.63, which is high day, we go inside up. I'm going to be looking for a move just for a quick scalp to that 200 MA. If we can get above that 200 MA, like I'm going to cut half the position. I'm probably going to get some weeklies. Cut half the position at that 200 MA, put the stop right under it. And I'm going to hold it into Powell and we'll see what happens. But it'd be very important if you take that to cut half the position while you're in profit if you take the weeklies. But unless we trigger, I'm not really doing anything. Short below the 426.99. Let's just say something, he says something out of the ordinary, like Andrew said. We already know what he's going to say. So they tend to do this, especially when it's something negative, like interest rate rising. They're going to let you know ahead of time, so it's not an overreaction in the market. So a lot of people are like, oh my God, Powell, but we know what he's going to say. I'm not saying position yourself in front of it, but after the news is going to come out, there's something called having trap traders. So if you look at a chart of SPY, you'll see 5 candles that are straight down. If we reverse, these guys that are in these shorts, they're going to have to cover. What's covering? Buying. They're going to have to buy this back. That's going to push price up. So I want to be a part of it if I know he's going to say something that's already priced in. I know if the market breaks a level and we push up, people are going to have to cover. I want to be a part of that rally. So that's it for me. I got a couple picks that we can get into, but besides that, that's it for me.
Awesome, man. Thank you. Okay. Stock Talk, appreciate you joining us. I think the sentiment part of this, I hear we're conversing about stock picking. Totally understand. I think we're going to give a lot of context to the stock picks tonight. But for a sentiment side, would love to hear a sentiment Stock Talk.
Yeah, I mean, I think this continues to be a market that is, driven by events. We had a couple weeks over the last few weeks that were driven by, economic data. And now we're coming to a point where I think there's some consensus, at least from market participants, with regard to expecting the Fed to stick to 3 to 4 rate hikes this year, potential quantitative tightening coming in December or early next year, depending on how aggressive they want to be. But I also think, there's more and more chatter emerging in the broader markets about the risks of a slowing economy headed into the end of this year, and also the risks of, other geopolitical tensions that we've seen emerge over the last few weeks. And, I'm not making the assumption that Russia and Ukraine are going to go to war and that we're going to fall into this geopolitical turmoil, but the possibility of it is enough for the market to react. And, I don't think that the sell-off over the course of the last 6 or 7 sessions has been, driven entirely by either of those catalysts. So, I don't think it's 100% a reaction to the FOMC tomorrow, and I don't think it's 100% a reaction to the geopolitical tensions either. I just think it's kind of a mixed bag. And, the market doesn't like uncertainty, as we all know. Last year, early last year and mid last year, there was some uncertainty with regard to how the Fed would proceed. I think hot inflation numbers, towards the end of last year and early this year have kind of forced the Fed's hand. And now we're in a situation where the market and the Fed are kind of on the same page. It's just a matter of how long the reaction takes to flush out froth from the market, because, make no mistake, if you look at it historically, any kind of tightening of monetary policy typically leads to a compression in multiples. And it's not a complicated thing. A lot of people really try to overcomplicate it. It's just about the time value of money, simply about the availability and accessibility of money. And you can find a number of macroeconomic angles to explain that, but in reality, it's just purely the fact that, interest rates that are trending up speak to a tightening monetary environment in which, these future cash flows that we're valuing all of these growth and tech businesses off of become less and less valuable the tighter and tighter monetary policy becomes. But as I said before, I think the sentiment right now is not so much so around the interest rate hikes, which I think, may not be fully baked into the market. But I think people who are going to react, asset managers, fund managers, retail traders, individual retail whales, people who are going to react to interest rate hikes have either already done so or already begun to do so. And so, additional selling, and I'm not saying we're at a bottom at all. What I am saying is additional selling that we see from now through the summer or through the end of the year is largely going to be inspired by other factors. It's not, I don't think it's going to be centered around the interest rate hikes. I think the new fear emerging is quantitative tightening and how soon that will come. Because if you look at, again, the historical data, you've had taper tantrums in the past. You haven't had steep market reactions every time we've tapered, but you've had taper tantrums in the past, which, is part of what's fueling, I think, some of the selling recently. But, when you look at purely interest rates and tapering, and you look at the S&P's performance at a 3-month period beforehand, 6-month period beforehand, 3-month period after, and 6-month period after, the S&P by the 6 months after has in every single case resumed its uptrend. The issues, the cases where that is not true are the cases where we've also had a steep period of quantitative tightening. And so I think that's the larger fear. And, going into tomorrow, I don't expect too much to change from the Fed. But I do know that Powell is a master craftsman with regard to his rhetoric. And he is very good at phrasing things in a way that settles the market and kind of abates reactions. If we remember last time Powell spoke, we had a very steep sell-off, literally headed into his comments. We had like a 2 or 3 day sell-off headed into his comments. The selling continued the day of his comments. And as soon as he testified, we had a massive rally. I mean, it didn't last because 2 days later, we had a quad witching on that week, which obviously pulled the sentiment back down. But, he's great at driving rhetoric in the direction that he wants it to go. And so, I tweeted earlier today about how I said it's in the Fed's incentive to be dovish tomorrow. I don't mean dovish literally, as in they're going to change their policy and be more dovish with regard to the directive of the policy. I mean dovish purely from a sense of rhetoric. I still expect that to happen. Now, will the market rally off of that? I don't know, but I think there's at least a chance of it, considering that we've had 2 days of selling. I mean, granted, yesterday was a big red to green day, but we've had 2 days of broader selling, at least off the rip when we started these sessions, which could set us up for a potential bounce tomorrow. Who knows what happens, but it could. And I think the sentiment is continue to be driven around these Fed events, at least for the foreseeable future, because people really want to be reassured. The market's like a baby. It needs to be, coddled and reassured constantly. And there needs to be broad certainty for the market to find a direction. And I would be fine if we found a direction on either side. When you have nothing but doom and gloom and negative catalysts, the market can trade down constantly and be in a definitive bear market. We're not at bear market stage yet for the Nasdaq. When Nasdaq was down today at its peak, we were at 16%. I don't know what the number is now, but we were at some point today we were down 16 to 17% from the highs. just by definition, we're looking for at least a 20% drop to consider it a bear market. And so I don't think we're there yet. And I'm not sure buyers will step in before then either. But I definitely think this is just, a market that's going to trade around monetary policy this year. It's something I said towards the end of last year in a lot of spaces, which was that, new traders really need to educate themselves on Federal Reserve decision making, monetary policy, how that affects the markets. Don't overcomplicate it. Just really understand the basics, and it has to inform your trading and investing decisions at this point. People, I've heard it from different schools of thought, and from the investing school of thought, a lot of what you hear in markets like this is, hey, just continue to average into your favorite plays. 10 years from now, I think the tweet I saw most yesterday was 10 years from now, these prices will seem like steals, and everybody's slapping the like on the tweets and, oh, I agree. Oh yeah, you're so right. Yeah. 10 years from now, these are all going to be steals. What? Unless you're buying the S&P 500, that is not the case. Unless you're buying, an index, that is not the case. 10 years from now, half the stocks that FinTwit are trading won't even be here. And the ones that are, a lot of them are not going to be trading higher. Some of the stocks that you're buying today thinking it's a steal, we're dealing with a 10% correction in the S&P. That's a nothing burger. The individual equities, depending on how speculative the names are that you're trading or how high multiple you're trading, yeah, they may be down 60, 70, 80% from the high. But go look at the charts of some of these stocks that are trading at 50, 60, 70 cents today. Go look at their 5-year and 10-year charts. If people 10 years ago had told you about those equities, oh, just buy the dip, don't worry, you'll be fine. In 10 years, it'll be a steal. 10 years later, the stock's trading at 80 cents. People are misallocating advice and information about the broader market to individual equities. And that is going to murder a lot of people's accounts in the long term. Because being an investor is not as easy as just DCAing into your favorite names. There are names that I traded. I mean, I started trading literally exactly 10 years ago. Well, not exactly, but, a little bit over 10 years ago. And if I owned some of the names I owned back then, today, oh boy, I would be holding a massive bag. I'd be holding bags that were down 98% if I was still holding some of the names I was trading back then. So, don't fall into this, both investing and trading schools of thoughts. There's so much misinformation that's spread on Twitter and social media that is encouraging people to make decisions that can absolutely destroy their portfolios in the long term. So don't blindly buy things. Don't buy things that you think just because they're on a dip. Like, if a stock is red, it doesn't mean that you should buy it. You should buy it based on what is working rotationally in the market. What themes do you expect to stay hot in the near term? Opportunity cost is a real thing. Unless you have unlimited money, which no one does. Whether you have a $10 million portfolio or a $100 portfolio, you have X amount of dollars you can spend. And whether you're not leveraged at all or 10x leverage, you still have X amount of dollars you can spend. And so if you're spending all of your buying power just reallocating to convictions that might be down 30, 40, 50% from the highs, I have a buddy who has been quote unquote buying the dip on Upstart since it was $350. And every month he's like, oh, I'm buying the dip here, shouldn't be trading this low. It's a great company. Now, where is it, the stock, right? It's what is it, $100? Is it even lower than that? I mean, I haven't looked at it
it's
in a while,
under.
but yeah, it's under $100. And I mean, think about that, from $400 in a matter of a few months. So people can get slaughtered falling into these narratives. And so, my emphasis is that you should find the best place to put your money, not necessarily not be willing to admit that you're wrong. Because in my opinion, the number one reason that both investors and traders fail, the number one reason, and obviously everybody's opinion is different, but in my opinion, it's because they're unwilling to admit that they're wrong, or they take too long to admit that they're wrong. And that is a huge caveat of both investing and trading, because if you're a trader and you don't cut your bag soon enough, that brutalizes you. If you're an investor and you're convicted and you keep convincing yourself, I'm going to keep buying this name because I'm convicted, I love the business, and the business gets completely repriced and ends up trading, you bought it at 50x sales and it ends up settling out at 6x sales, you're going to get slaughtered. And most people are going to be unwilling at that point to cut their bags. And those are the bags that, I have a couple buddies who started trading 5-6 years ago. Well, I won't even call it trading. I'll call it investing, because that's what they've become now. But they started quote unquote trading 5 or 6 years ago, and they're still holding bags from when they first started trading, because the bags got so big that they just couldn't cut them and they never got to it. And the stocks went down and down more and more and more. And they're still holding these. Like, I was looking at one of my friend's portfolios the other day, which I hope he's not in here. If you're in here, buddy, I'm sorry, but if he's listening, but I was looking at one of my friend's portfolios the other day, and he was holding a stock that's down 98%. And he had $190,000 loss on it. So, and he averaged down into that equity over 2 years. And now 5 years later, he's still holding it. So don't listen to people on Twitter, including me. Just don't. Do what's smart, and, allocate your capital in the most efficient places possible. You're not always going to be right. There's going to be times where you rotate and you're like, fuck, I shouldn't have rotated. Financials kept ripping. Or there's going to be times where you sell a stock and 2 weeks later, they drop a big PR and it goes up 20%. These things are going to happen. But you don't have a time machine, and the only thing that you have to be able to manage your risk and manage your portfolio is opportunity cost and risk management, and that's it. So if you prioritize opportunity cost and you consistently manage risk, you will at least be able to play this game in the long term, at the very least, and that's a lot more than most people can expect. So yeah, I mean, I'm getting on a bit of a rant now, but yeah, that's just my general, I guess, opening point about sentiment.
I think you hit on all the points, absolutely. And I think the real important one there that stood out to me the most was, I do agree. People say, hey, these are going to be great prices in 5 to 10 years, but that can't be a blanket statement. It just can't be. And you laid it out right for SPY, sure, but that is just not going to happen with a lot of these growth stocks. We've seen companies come be the shit right at the top of the world and go just as fast. So absolutely,
I think that was a mic drop there by Stock Talk. We can end the show now. That was brilliant.
I know. You want to get back to vacation in Miami. I get it, Ben. No, I'm kidding. Okay, Joey, you want to throw anything in here?
No, just a Stock Talk was absolutely preaching right there. That was great stuff. He that point was honestly gold. So yeah, just a good message to everyone that, SPY, you really can very confidently say, right, going 5-10 years down the road, it's going to, keep going up. But for individual names, you really got to do your due diligence and don't just, blindly buy the dip. So he was spitting some facts there for sure.
Perfect. You want to come in with any market sentiments, or are you chilling?
I'm good for now, man. I'll let the experts handle it, right? I'm more of a long-term guy, so I'll let them take care of it, and I'll definitely can tune in later. But yeah, I'm all set.
Sounds good. Okay. Stock market news coming to you.
Yeah, damn. I was hoping Joey would give something there so I didn't have to follow Stock Talk on that one. That was some great thoughts there. And I think that
I don't want to flex too hard, Evan. I mean, want to take it easy here.
Nah, I needed you to take some of it off of me, dude. But I appreciate it. But yeah, I think one thing that's really important is just to always make sure that the stocks that you are dollar cost averaging, that you're putting money into, as Stock Talk is saying, that the companies are worth that. And it's not about where is my position at exactly. It's about constantly looking at the stock and the company itself underlying it and seeing has the management constantly rewarded my trust and earned my trust, and are they hitting on the numbers? Is it still a good stock to hold? I think it's not just blindly. It's not blindly buy a stock. It's not do your research now and just hold the stock forever. Dollar cost average and it dips. It's constantly do your research over time. And for the long term investor, you could buy into those dips. You could do technicals. You could do whatever. but there's a lot of good strategy in there. But you have to constantly reevaluate your stocks and make sure they're still worth holding and buying into. Overall, this market this week, this is the definition of volatile. We're literally on a roller coaster. Both days we've had such very red opens. And then we got to a point yesterday we were able to close green. Today we didn't quite get there. But it kind of just tells me, I know a bunch of people have talked about it, but we're really waiting for the Fed meeting tomorrow, in my opinion. That could be wrong. We could come and go, and it could just keep doing the same thing. We could just be in that type of market. But to me, it's a lot of indecisiveness ahead of that major piece of information, along with earnings. It feels like the market is very much on edge right now. And I looked to the Microsoft earnings. Stocks do tend to move very quickly around earnings, so it's not too irregular. But the reason, in my mind, Microsoft moved lower off that initial print is because they did not give forward guidance. In the initial release, they waited for the conference call to give it, which the Wall Street didn't like, which was very interesting in how much the stock sold off, not because of bad information, but because of an unknown. It felt like the stock was really waiting to move lower. And then once we got the forward guidance on the conference call, that was exactly when the stock started to bounce back. So, Microsoft is higher right now, and it seems like stocks that hit on all cylinders will still be rewarded in this earnings cycle, but it does look like Wall Street is, and markets in general, are really looking very hyper-focused on this one, looking for that one bad thing that could send it lower. So I have that. It's still in my mind. Maybe the Fed changes that. Maybe some really good earnings change that. It always is about taking what the market gives you, not just going based off your pre-fundamental thoughts. But I will shut up there because I am definitely much more of the long-term investor in here as well. I do want to say, I know a couple people have said this already, but make sure you are following all the panelists that we have up here. This crew, Tuesday night is 8 p.m. is coming here every single week, sharing some really great insights, amazing information. All of them have really fantastic Twitter accounts, tweeting out some really great stuff. Check all of them out. Hit the follow button, see what they're about. And big shout out to Wolf for putting this on. Yeah.
Thank you, sir. Appreciate that. Yeah, Joey, I saw your hand up.
Nah, Evan took the words right out of my mouth there. I was going to say the most valuable thing I could add right now. Yeah, be sure to check everyone out. They put out great content all the time, so they will give you a lot of value. So be sure to check all of them out. Definitely worth it.
Perfect. Yeah, absolutely. I think you guys both hit on it well. We just heard a sentiment portion of the evening. So you heard sentiment from all the speakers on, where they believe the market is going at this point. And now we're going to hear a little bit on how they are positioning themselves. Now, I would say everything tonight with a grain of salt. Stock Talk made a good point. A little bit weird doing this on the night before the FOMC, right? It's like if they're dovish, right? If they're bullish, then we're going hard and we're going long on everything. And if they're bearish, then we're going short on everything. But I think it can be a little bit more technical than that. So I'm happy to give speakers, the opportunity to kind of clarify any of their positions. Again, we're keeping this to max 3 positions total. And again, just aiming for that 4.5-minute mark. And within that, if you want to make it a bit of a longer one than just this week or something, if this is, or if maybe the setup's really good and it can kind of get, pushed more by tomorrow, you can kind of give it whatever context you would like. So with that being said, once more, do make sure to follow as people are speaking. If you're listening and you resonate with something that they say, this is just an elite panel. We've had them on week after week after week. 90% of the people that are up here support themselves full-time by trading pretty much every single day, but they do it through different styles. There are technicals, people that are more fundamental focused, people that look at option flow, and all different types of areas. So there's really something unique to learn from each of them. And of course, if you're enjoy joining spaces, myself and the other co-hosts up here, we're doing 19 spaces this week, plus I guess 20 now that we're adding another one tomorrow, and I might add another one the next day after that. So we'll see how many more we end up kind of rolling with. But we are your home for spaces, and we will continue to deliver. So thank you for all the support. Okay, let's go into stock picks, starting with you, Danny.
Perfect. Yeah, I'm going to keep it short and sweet. I do have to bounce after this talk, so I won't even take 3 minutes. So Yeah, definitely really quick to touch on Microsoft. Strong guidance mentioned on the earnings call. Um, Income and expenses should offset in Q3. Xbox hardware demand continues to exceed supply. Cloud revenue hit $22.1 billion. Xbox revenue is up 10%. So the only concern I have on Microsoft is that it did hit its swing low anchored VWAP to the upside and got rejected almost to the penny. So it's not necessarily what I'm watching, but I do think that it bodes well for what we might see with Apple, I believe, tomorrow. So as far as individual names, I did post. I won't go over all of them, but to make it easier on everybody in the audience, I posted every single chart up there. They're not fully detailed out, but you can see levels for breakouts and targets on every single name. I will go by sector. So XLE, energy has still and continues to outperform, up 19% over the last 30 days. The only other two sectors, or the only other two individual areas that I'm seeing any kind of similar, not even similar, but any kind of green is SLV and gold. SLV up 4.1% over 30 days, GLD up 2% over 30 days. XLF is flat, down 0.9%, and EEM, emerging markets, right behind the number 5 position, down 1% over the last 30 days. So I'm just looking out on a 30-day rolling period. As far as energy, I mean, you could pick any of the names. The only one I would say is already gone is XOM, which is Exxon Mobil. But I like OXY, I like OIH, and DVN. We talked about that earlier today. I like the defense sector. So Lockheed Martin, Raytheon, Northrop Grumman. You could take a look at those charts. Those all look ready and good to go, especially if things heat up in Eastern Europe. And GLD, I mean, we've been talking about this for a couple of weeks now. Got a beautiful massive wedge forming. That looks ready to go as well. And then the last two, CF and C and KHC, you could take a look at that for yourselves. But that's pretty much it. And I'll give you my sentiment. Just wait for tomorrow. That's it. There's really nothing much more to say. I'm going to be continuing to day trade in the mornings. I'm done by pretty much 10:30 Eastern Standard every day. I go out and I enjoy my day. I read. I do fun things. Even though it's absolutely brutally freezing in New York right now, can't really do too much outside. But yeah, I'm just enjoying life. I'm just enjoying the rest of my day. Not trying to let this market spook me. I'm doing what I got to do. Everything that's long is hedged. And that's pretty much it. So, do appreciate everybody up here on the panel. You're my Tuesday night buds, and everybody in the crowd. Always appreciate you coming back, and giving us a shout. And make sure you're following everybody up here. And like I said, just to keep it easy, and I'll try and do this moving forward. All my charts are up there in the nest, all in a thread for you to peruse. If you have any specific questions, then feel free to drop comments in questions in the comments section. So thanks for having me again, Gav. Thanks for everybody up here, and thanks for everybody that's attending. Peace out.
Perfect. And Danny, I see there's a bunch of tickers up there in the top. Or were there three specific ones that you were kind of outlining here?
For sure, my number one on watch is going to be GLD. I think that's got the nicest setup of everything. It's got a beautiful. It had a false breakout into the wedge today, so I think that looks probably number one on my list. The next one, I would say, of the defensive names, I think Northrop Grumman looks the best. NOC. It's been coming up into that 408.21 level a couple of times. I think over 408.21. I like that to the upside. And then as far as energy names, I think it's a hat toss between DVN and OXY. That's Devon Energy and Occidental Petroleum. Both look really good. Like I said, Exxon Mobil already has gone. It's not where I would go, but OXY and DVN for me, that's a hat toss. They both have really good days. OXY was up 8%, DVN was up 6%, and they're both on the brink of breaking out. So like them both.
Awesome. Thank you, Danny. Appreciate you spending a good amount of time on Spaces with me today, yesterday. I'm sure you'll be on tomorrow.
Absolutely. See you tomorrow, man.
All right. Take care. Okay. Let's keep going with the picks. Vegas, would you like to go next?
Sure. So I just want to say that everyone's watching. A lot of financials are obviously reported in the last week, and we could see that, in my opinion, the XLF was bullish, and we'll see what happens tomorrow. But still bullish on XLF, heading to probably towards, if it continues like this, towards 42. So as a result of that being bullish, Bank of America has had a lot of dark pool prints. So bullish with the fact that it's over that $44 level on Bank of America. I think if it can eventually get over 48, we'll see a nice move towards 50. So keep that one on watch. I am watching also Citibank, but that one's not ready just yet, but it is setting up. So if we still see momentum in XLF, I think I'll like to see Citi break 65, and if it breaks, it could go towards 67.50, and then really still liking GLD for continuation. And the only one that's looking bearish right now for me, in terms of some of these stocks that I'm watching with the money flow, is Oracle. Oracle broke down below $82, and so definitely looks bearish to me. I think it's going to go down towards potential 75. The earnings will be out on March 9. So at this point, the fact that it's under 82 is bearish to me. And last but not least, I just want to mention Uber. Uber is looking bearish as well. That one is under that 35.50 level, so I think it's going to go much lower on Uber. And the last one that I like, and Uber probably can go towards $32 is where I anticipate it going. The earnings is February 9. And just the last one I just want to mention is Schlumberger. That's a pretty good one to trade, SLB. And I do like that one as well, that it's over $38. There has been a lot of dark pool flow on that one as well. And that one is probably heading towards 40. I think it probably might go higher than 40. Trade's really nice, and some nice dark pool came on it even today. And that one could be on watch too. So I think that one's a good one for a continuation to the upside on that one on Schlumberger. And those are my picks.
Okay, perfect. Do you want to rattle off those tickers once more?
Yes. So BAC, C, and GLD, ORCL, Uber, and SLB, like Bob.
Okay, SLB, Uber, ORCL, GLD, BAC, and I thought you said XLF in the beginning there, but no?
Well, I was just going by the actual XLF ETF, so I think if that remains bullish, we'll see the continuation in those bank stocks, so BAC,
Okay, BAC.
and C.
Okay, and C. Okay, got it. Awesome. Thank you, Vegas. Okay, Ben.
Great, thank you. And hey, those of you who want a deeper dive into Vegas's picks, tomorrow at 5:30, we're doing spaces with Vegas, so she can get some time on each of those or some other ones. We'll see. I love her picks and her style. So I want to start off just being held accountable for what we noted last week. So have some continuity with the conversation. So last week I said I'll be short the NASDAQ with PSQ. As far as my hedging program, we'll get into the stocks in a second, but with the hedging, I'm still long PSQ, which is shorting NASDAQ, but I did rotate some of that into gold. I was happy to see some of the positive comments there from the speakers on gold. And last week I talked about dipping into ARK K if it hits the 200-week moving average around 73, and I did follow through with that, and I with calls, and I averaged down on Monday. So I'm still managing that position. That one's turned out to be spectacular for me as far as some day trading goes, or swing trading. But as far as the individual stock picks, I have an update with RELL, Richardson Electronics. Let me just get this tweet up real quick with the updated information. Let's see here. All right, so with RELL, here we go. Sharing it to the, thought it was. All right, there we go. So RELL, hey, I posted a chart. This is a rare stock. It's corrected off the top. It's been a very bullish trend, but it's still holding a 50 DMA. That's a rare tech stock, still holding a 50 DMA. One of my larger positions after we did multiple weeks and probably dozens and dozens of hours of due diligence. It was a combined effort of like 4 or 5 people from our community. And we actually released 2 YouTube videos on it last few days. One was my kind of summary of all the due diligence we did. So you can go ahead and see that at youtube.com/storytrading. And the other was an interview we did of the CEO and other management. So I'm going to continue to say, I think last week I said this is a long-term pick for me for this year. I'm going to continue to hold on to that. Glad to see the 50 DMA holding. Doesn't mean that it will continue to hold. So that's REL. Also last week, just a quick update, CFVI I mentioned, that's the SPAC that they're buying Rumble. So there's like a sentiment play there with DWAC. DWAC has been very strong for the people who've been following that. So I'm still long CFVI. There's another one kind of sentiment play. I don't want to really talk about it too much, but you can see it on my tweet there because it's a really small market cap. So a second pick, though, I have BCRX, BioCryst Pharma. And let me share a chart on BioCryst right now to the top of the room over here. BioCryst Pharma is a long time, what we call VIP pick in our community that someone presented on one of our Zooms, gosh, a year and a half ago or so. And it's been performing great. It's up like 300% since it was picked or presented. We had an updated presentation from someone in our community just Sunday night. And I thought the presentation was awesome. I think I added more to my position actually after I saw that on Monday morning. So you can see it had 2 solid days. It went up again today after finding support and bouncing yesterday, and it's above the 200 DMA now. This biopharmaceutical company, they are kind of inflecting. They have an approved product. Sales are growing. They're inflecting to rapid revenue growth. They put out guidance recently that it's going to be their drug Ordalio is going to have $1 billion in sales, and they got $300 million in non-dilutive capital, which is key in this market with interest rates rising. $300 million in non-dilutive capital. So that's BCRX. And a quick little shout out. I don't have conviction in this name, but I want to throw it out there for people to look at. ALTO. I don't know a lot about it yet, but someone from our community, and you can follow him. I tagged him, M Spark Capital. He has been on fire with a ton of picks this year, just bucking the market trend. And he was hitting the table on ALTO the last week or so, and I didn't listen to him. They came out, they pre-announced earnings, and I jumped in yesterday. It's been a good trade for me. I put the link, the Yahoo Finance link over there of the pre-announcement and guiding up, and it just looks really strong, and it closed over the 200 DMA today. So those are a few individual picks where we're looking at a combination of factors of fundamentals, catalysts, sentiment, and technicals to still be making these long swing trades even in this terrible market.
Perfect. Can you rattle through those tickers once more?
REL, Richardson, RELL. That's a long-term hold for me for probably 2022. BCRX, same thing, long-term, although that may be really good intermediate term too, BCRX. And then Alto, kind of speculative. I'm just starting to look into an ALTO, but they appear to have a strong catalyst yesterday with strong technicals today. So I have that starter position, so I'm looking into ALTO.
Perfect. Thank you, Ben. Great.
Thank you. And thank you so much. I'm going to hop off so I can get to my dinner. So thank you so much for putting this show together. And again, give everyone out here a follow. Man, I want to say Stock Talk, that little clip he had, you got to make that into a dedicated YouTube video. That was freaking awesome. And if I can just take a second to follow up on one thing he said, when we talk about, because I think it's 100% true that inflection point in people losing money to making money is an ability to say I was wrong and cut your losses. That's so important. But I want to say, I don't think that's necessarily anything to do about ego. I think it's just, I know so many people in the real estate industry, and anytime they come into stocks, they just can't get it straight because they're just conditioned to believe that every real estate deal you make money, and they can't put their head around it. And this is a game of odds and probabilities, and a lot of people don't understand that. So I don't think it's about ego. It's just about learning, and it takes time to wrap your head around this concept. People are, I go to work, I get paid. I buy a house, I flip it, I make money. Like, people are conditioned to believe when you put work into something, you're going to make money. And this is such a different way to make money than anything out there that exists in the whole entire world, right? So, don't want people to feel bad to say, hey, you don't know what you're doing. It's all about your ego. You have to be right. No, they're just conditioned to believe that when you put time into something, you're going to make money. So, I think it's important to point out.
Absolutely. Yeah. Great points all around. I saw Stock Talk that you tweeted that out too. What you had stated there. So really, really good stuff. And thank you, Ben, for joining. Enjoy the dinner.
Thank you. Yep. No drop off. Take care, guys.
All right. Take care. Okay. Let's keep moving with these picks. Juicy, you want to go next?
Yeah, of course, man. So for me, guys, I'm a short-term trader. Right now, I have that short-term hat on. I'm going to throw two ideas out here. I don't have, give me 1 second. Throwing idea 1 up there. Throwing idea 2 at top. All right. So all this is going to be based upon the SPY, right? SPY has all 11 sectors. You would need SPY to break. And my first idea will be SPY itself. If you break 439, first target is going to be that 200 SMA at the 442 area. If you break that, we're going to be looking for the 448. All right. So that's the first one is going to be SPY. You also have a short side trigger of 42699 if everything goes wrong and then we sell off for whatever reason. If you break that short side trigger, you're looking for price to pull back to that 420 area. First one that you should see is Goldman Sachs. We did see flow go into the financials today. You saw a big move here in Bank of America, and as the market was pulling back in the beginning of the day, financials were pretty decent here. So Goldman Sachs is a laggard. It's also inside, so long above the 34294. You got price targets listed, and if everything goes wrong, your short side trigger is going to be that 33091 level. Next one is the one above it. It's going to be Facebook. In these type of environments with these rates, I see tech usually makes some type of move. It'd be good opportunity for short-term traders. Long above Facebook, long above that 30621. We're looking for that to push up to that 30961. The other price targets listed above too, and short below that 297.55. But I'm going to keep it short because I don't want to give out too many recommendations. In all honesty, I recommend if you take any trades into the Fed, even though we know they're going to say, we don't know how it's going to react. So playing the short term can be aggressive. It's different if you're coming in saying, I'm going to buy shares, I'm going to buy quarterly calls. It's a little different. But if you're coming in with the weeklies and the bi-weeklies, I would wait and play with half size to see the reaction, trade the reaction.
Yeah, absolutely. So I have a couple questions, but can you run through those tickers once more?
So it's going to be SPY, Facebook, and GS.
Okay. And yeah, we'll definitely be trading during that stuff. I think you'll be free at around 2 p.m. EST. Hop on a space?
Yeah, I can hop on. I'm going to run both calls, though. If it's cool with that, I'm down.
Hey, man, you always do.
Yeah, I'm cool. All right, cool. I'm with it.
All right. Thank you, sir. Okay. We're going to keep going with the stock picks. Let's go over to Andrew.
What's going on, guys? Yeah, so for this week for stock picks, there's one group that I really want to call out that a bunch of speakers have already mentioned, but the gold stocks and gold specifically. So I just shared a chart of gold in the nest. And what I think is very interesting about the setup here is on my chart, I have the yearly value area. And you can see that we're on the verge of breaking out of that yearly value area high. That's on the GLD ETF. The resistance level to watch for is 173.5. I took a position in GLD yesterday to play for that breakout. So I added some March calls in GLD. In terms of other specific stocks and other specific areas of the market, pretty much every chart just looks so broken that I'm not really looking all that much at specific stocks. I think the energy stocks, the charts all look great, but for the most part, the energy stocks are all pretty extended. So I can't really tell anyone to take an entry in those here. GLD still looks like you can get a really nice high risk reward entry point, so that one still looks pretty good. But where I think there is a huge edge for tomorrow it's really not in individual stocks. It's really just in playing the market itself. So in order to play the upside in the market that I think we could get into the end of the week, I put on some SPY calls. My calls are expiring this Friday, and I put those on yesterday, I believe. So I was like, you know what? I want to see if we get a move on a pop from the Fed meeting. I'm going to enter these for Friday, position size them for max loss, and see where that takes me. So I have those heading into Fed Wednesday, and then pretty much immediately after Microsoft reported their guidance, I saw the guidance looked good. I saw Microsoft start to reverse course, and I just immediately went into the after hours. I had a 40% cash balance in my trading account, and I put it entirely into TQQQ, the triple leverage NASDAQ ETF. So yeah, I think with Microsoft having reported good earnings and that, negative catalyst out of the way, yeah, I think there's, a good chance for upside in these indices. But what's interesting, so the setup for tomorrow to watch out for with the indices is look at how the market behaves in the beginning of the day. To be honest, like I'm not going to be doing any short-term trading in the beginning of the day, trading ahead of a Fed Wednesday, unless you're like a shark short-term trader. I know some of the panelists on here, that's their focus area. For me, it's really not. So I'm not going to be worried about any movements before the Fed. I would just say, like, if we start to see some dips in the market ahead of the Fed, you'll know it when you see it if the shorts are trying to get out of their positions. Like, really, what you'll see is like dips that are very shallow and every dip just getting bought quickly. So definitely, just watch out for that. But yeah, for the most part, for me, I'm really just looking at the indices, the NASDAQ and the SPY. Those are my two preferred vehicles. And then another group I'll be watching tomorrow, I might not even participate in it, to be honest, is the travel stocks. I noticed, like, I've been seeing headlines the past couple of days that Europe is lifting their COVID restrictions, and I think that might be helping the energy sector as well. But look at some of these stocks like Expedia, Royal Caribbean, a lot of the travel names. I noticed those having some strong action today, so I'll definitely be just checking those out. But what's really interesting is on days like this where the VIX is at like a 31, and the market's just a coiled spring. What's interesting is like a lot of people on the panel have mentioned like energy and gold because those areas of the market they're in really good trends. But if the market's going to have just like a very violent bounce, a lot of the stuff that's just complete garbage might really be what bounces the hardest. So I think it's all about just understanding like if you're taking positions in the market or taking on risk tomorrow, like what's my time frame for this trade? Like if I really just want to like flip something for like a quick profit, maybe you go for like some of the beaten down like growth stocks or something of that nature. But if you're really of the mindset like let me go with the strongest trends, then something like gold or those energy stocks are probably where you want to be. So that's really where my head is at into tomorrow. I'm just going to keep it simple. With the VIX this elevated, you can trade the indices, and it's practically like you're trading an individual stock.
Okay, awesome. All right, run around through those tickers once more.
Yeah, sure. So the tickers I'm looking at, SPY I have a position on, TQQQ I have a position on, and GLD I also have a position on.
Okay, that one's definitely looking popular. I know on our earlier call today, Jake Wojastik was pretty enthusiastic about that position as well, and he liked how it was looking. So, everybody keep an eye out when you see, multiple people looking into one. Hey, it's not financial advice, but it certainly is powerful to have it on your radar. Add it to a watch list. Do a little bit of due diligence to dig in. Appreciate you being on here with us, Andrew and Sharon. Okay. All right, let's keep it going. Mel, would you like to go next?
Yes, I may be a little bit over the threshold, but I just kind of want to do some due diligence and give a little lay of the land. So I'll jump right in, but I'll be talking pretty fast. One thing that I want to make sure to mention, I think everybody saw several posts yesterday to where the volume was definitely above normal. I do want to highlight that all of the major ETFs, SPY, Q, IWM, saw way above average signature prints. Our signature prints are delayed prints that come through the major indices. We know that they are delayed transactions. They occurred the evening before, but record to the tape the next day. Yesterday, SPY seeing 71, Q's seeing 37, IWM seeing 25. And why this is important is because you see an increase in these signature prints at turning point levels, tops and bottoms. We have not seen the larger levels. We tend to look at an average. And when you start to see those increases, it's usually when we start to see turning points in the market. I think that's worth noting. But additionally, we had real-time prints come into each of the major indices at the time that we turned yesterday. All of those levels held today. So the SPY had 1 million real-time share yesterday, 423.82. The Q's 1 million shares, 342.28, and the IWM 1.2 million, and IWM doesn't see that kind of size, so extremely notable at 193.97. I like that we had closing price action above those levels, so starting there. Additionally, we saw today not necessarily the same thing that came into the individual ETFs, but we did see some action come into some of those alternative ETFs, the stuff that nobody is looking at. We had dark pool activity come into the SSO, that is 2 times leverage ProShares ultra long the S&P 500 with 4.14 million. You rarely see activity there. And we also had the QLD 2 times leverage Qs 4.23 million shares. So I'm leaning a little more bullish on the indices, considering that we're holding some major dark pool levels, and we're also seeing a little more activity here at lows into some of the leveraged ETFs. My pick, that's the lay of the land. My picks, I'm interested this week in XLF. That's already been mentioned by several, calling out a few individual names, but worth noting that we had 21 million shares dark pool wise yesterday at 37.55. That is extremely notable. We tend to only see the larger activity coming into the XLF prior to earnings. Rarely do we see it after earnings. So we've shown some relative strength today in some of the financial names. A few individually called out, but I'm just going to take the basket. Playing it a little safe this week because I think it's important to highlight some of the sectors. That way everybody's able to find some opportunities, whether they're looking at some stocks that may be higher priced or lower priced. Goldman versus BAC is definitely going to have a little bit of a pricing difference. There's an opportunity for everybody based off of your account size. Secondly, I'm going to go to TAN. We rarely see options flow in TAN. It tends to usually do well. We had the $64 calls this week come in with 170,000 in premium. That is going to be our solar ETF. I'm kind of a little more on the side that we see some short squeeze activity into a few names that have been pretty beat up. I think that's something that Andrew was alluding to as well. Within that basket, you have FSLR, Run, ENPH, JKS, SunPower, a few names that have the opportunity, and when they get going, they absolutely run. But as far as a pick, going with just the sector overall, because we've had some options flow. Additionally, Andrew, again, alluding to the travel sector, jets today, seeing some dual flow. We had 800,000 dark pool shares come through, as well as some interesting call flow. I mentioned this earlier. We're starting to see with an elevated VIX more put writing than we are seeing call flow. They came into jets 2, 4, 20, 50 puts at the bid. They are writing to collect premium with 347,000 behind that. You do not want to buy that. They're looking to let that decay. However, they did also come in call side, so kind of a duality there. Bullish put activity as well as bullish call flow. We had the 2050 calls as well as the 2150 calls seeing some activity. We did see a higher high on the jets. Quite a few of those names being beat down and some of those holding some higher short interest, particularly AAL as an individual name. But I'm going to go with TAN, TAN, XLF, and JETS.
Okay, so that was TAN, XLF, and JETS.
Yes, sir.
Perfect. I am just noting that down. I did see that JETS print as well, that you posted. Those are pretty good. And I assume you pinned everything up top?
I did for all the picks. Some of the alternate ETFs that I mentioned that I think can share some market sentiment are in my personal feed. I didn't share those. I kept it with what I was going to call out as picks this week.
Okay, fantastic. Thank you, Mel. Mel's great with dark flow, option flow, and everything in those lines. So be sure to be checking her out as we're going through this. Real quick before I throw it over to the next speaker, we have been running for an hour and a half now. Just want to throw this out there 30 seconds because we always seem to get dozens of people that sign up every time we talk about it. So I know there's new people that haven't heard about it yet, which is why we do it. And that is, we are doing so many spaces this week. We're doing 20 spaces this week. This is number 9 of 20. If you go to my pinned tweet, you can see when a lot of these are happening, but stuff comes up. We have speakers added, we have new spaces added, and a whole other, world of things can happen. So how can you all, who are very busy people, who have lives, who don't spend your full day on Twitter just seeking out Twitter spaces, know when Twitter spaces are going to be happening and come in just at the right moment, right? And tune in and know who's speaking. We've made that super easy. Myself and the other co-hosts up here, Stock Market News, Stock Talk Weekly, we've collaborated on a free public Google Calendar. We now have over 3,500 people subscribed to this calendar. And the easiest way to get on it is right now, if you click on either one of our profiles, myself or Stock Market News, and you click in, our DMs are open. Even if we don't follow you, anybody can DM us. Shoot us a DM. Make sure your email's in it. We prefer a Gmail. Works best with this Google Calendar. And we will add you to it within 24 hours completely for free. On this calendar, you'll see every single space. You'll see the topic of it, who's speaking on it. That's going to be in the notes section. And then once the spaces are done, we even go in and we stick in the link with the recording. So if you miss a single space, this is your perfect opportunity to refer back to and not have to scroll endlessly through our timelines because we post a bunch. So you probably enjoy spaces. You've probably been sitting in here for over an hour. We've had, really thousands of people have come through here. I'm going to start doing a lot more tracking of those analytics actually shortly. I'm getting an analytics service that I'll be working with. But a lot of people are new to each of these spaces and they find it. They're like, oh, I wish I knew when the next one was. But one, they don't look at my pinned tweet, or two, they just, they just come and they go. If you want to make life easier for yourself and know when all these spaces are, I see DMs coming in. Just hop right now into the DMs, shoot it over. We'll get you on there. It's completely free. And if you don't like it, you can unsubscribe at any point. But again, there's thousands of people on there, hedge fund managers, CEOs, people who work at Twitter Spaces, for God's sake, have DM'd us and asked to be on it. So we know it's working, and we hope you'll join up with that. And then, of course, as long as you're following the hosts, the speakers, you'll see these spaces showing up at the top of your timelines. I'm blessed to be a part of the Twitter Incubator program, the Spark program. So I think my spaces do get pushed to the very top of people's spaces tabs if I'm live. So just be sure to be following and you'll see it right there. Okay, with that, we are going to go over to Stock Talk Weekly. I know you had mentioned about the picks, but with that being said, is there anything that you want to put out there? Any setups that you're liking?
Yeah, I'll put in a couple things I'm looking at with some caveats. I think the strength and or relative strength in rare metal stocks during this sell-off has been pretty great. So, if the market cooperates, granted, all of these that I mentioned are going to have caveats because these aren't outright picks. These are just long or short based on what happens. But, if the market gets a bounce tomorrow or later this week, I like Vale a lot, Vale. It has dropped I think 4% during this broad sell-off, which is a nothing burger compared to what a lot of similarly sized names have fallen. So I like that for long. It's still trading around 1550, which is a pretty good support for it. I also like LAC and LTHM, which are names that I've liked for a while, but the dips on those names have gotten bought aggressively every time they're down 4 or 5%. They're kind of leading the indexes and rebounds even. I saw today the rebound in LTHM started happening well before we saw a bounce in Spire QQQ, which I thought was interesting. So that's definitely a sector to watch, I think. Rare metals and some of these other even larger metal miners like Vale coming out of a correction. If Bitcoin can retake 38,000, which is really the level I'm looking for, I was day trading those mining names pretty much every time it forfeited or retook a key level. We saw it, play in the 37.5s today, and it generated a few bounces in some of those Bitcoin mining names, but not a broad enough sector-wide bounce for me to consider it a key level, at least in terms of price reaction. So I'll look for a retake of 38, which is obviously still about $1,100 away from where we are now. So Bitcoin would need to make a decent move upwards. But if it does, I like long cores, CORZ, which is the biggest miner in North America, and I think probably the best valued miner in general. And then I also like BitF, which I think is in second place behind Cores as far as being the best miner. So if Bitcoin retakes 38, I like long Cores, long BitF. If Bitcoin falls back below 36, I like short Cores, short BitF. So that's a trade you can take either way. That's how I've been playing it. I've been talking about that on my Discord and on my Twitter. Basically, anytime Bitcoin takes a key level overnight, we go long calls on the miners at the open. Every time Bitcoin goes forfeits a key level overnight, then we go short. We play puts at the open on the miners, and I've played that exact trade on both sides 11 times so far this year, and it has not failed yet. So easily the most consistent trade setup I've seen um, so far this year. And I know we're only 25 days in, but that is a theme that has been working very well. It worked a lot last year as well, but it just works really well because you typically get the key level move in Bitcoin overnight or deep into the after hours where you don't see a lot of reaction in these names. And so they tend to respond the morning after, and they respond very aggressively. And another good thing about them, which allows you to get a better entry, is typically the brunt of the move doesn't happen in pre-market with these names. They tend to hesitate. Part of that is a volume issue. These Bitcoin miner names just don't see enough volume in pre-market to generate explosive moves, and so it kind of allows you to, at the open, those puts or those calls are not going to be super juiced on premium. It typically takes a while for them to ramp up, and these are also the types of names that tend to react, during the whole session. So they're not the types of names where you get a pop at the open and then, a hold for the session. It's the type of things where you get a 3, 4, 5% move at the start of the session that then graduates to a larger move over the course of the session as more volume comes in. So that's a trade setup that has been working very well. Long miners on Bitcoin strength, short miners on Bitcoin weakness. But you've got to play around the key levels. You can't just say, Bitcoin's not moving, so I'm going to go short, or Bitcoin's, hovering above this key level, so I'm going to go long. You've got to look for forfeits or retakes with volume on the underlying, which, I consider Bitcoin the underlying for all these stocks. I treat the miners as leveraged exposures to Bitcoin. So that's something to watch. And then, if those themes play out, then that'll work. Other than that, I'm also looking at potentially oil names, which made really nice day trades today. I didn't get the full scalp I wanted off of them, but two names I like if oil starts moving, whether it's because of geopolitical tensions easing or tightening, which oil can react either way to geopolitical tensions, but if we do get a reaction in oil prices, names that I like playing, I like trading smaller cap, mid cap names in reaction to moves in oil because they tend to lag. And that gives you an opportunity to get entries, whereas, some of the large cap oil names will respond instantly because they have more exposure, more eyes, more algorithmic preference. But if you look at some of these, kind of smaller oil names, then they tend to give you an opportunity to enter and then ride the move in reaction to oil prices. So if we see oil prices move, I really like OIS. It moves really cleanly. It's Oil States International. Keep in mind, both these companies are very small market cap, so don't trade these if you're not willing to trade high beta names with a high risk. But OIS and REI I like a lot as reactive names to oil. And you can play it in other ways as well with ETFs if you want. Give me 1 second. There was one other name in this group I wanted to bring up. Hold on. through my list. Oh yeah, you can look at I can't find the other name, but you can also look at the ETF for small cap energy, which is PSCE. That name trends to trade pretty well as well. It's just a leveraged or sorry, not leveraged. It's just an ETF covering the small cap 600 for energy, and it trades really nicely in response to oil as well. So OIS, REI, PSE, you can play any of those if the oil theme emerges. But yeah, I'm looking at obviously the broader markets, which would make me go long on these metals names. Looking at Bitcoin price action, which would make me go either long or short on the miners, and then looking at oil price action, which based on the underlying, I will try to trade a lagging move in some of these small cap oil names. But that's what I'm looking at right now. And obviously, if different themes emerge this week, then I'll be sure to jump on them. But again, I'm a day trader in this environment, so I'm not as much of a quote unquote in advance stock picker as I normally am. I really just try to trade what comes to me every day. So yeah, those are just some ideas I would say that could work if the theme goes in the direction that I noted.
Okay, so LTHM, if
Oh,
materials
I
is
forgot you were writing these down. Oh boy, I dropped a lot of tickers. In
yeah, well,
metals,
I got if oils move OIS and REI, if Bitcoin move, I just said play miners in either direction, and
yeah, I
then
mean you can put
yeah,
BitF and cores, which are my picks, in both directions. They drop hard when it's going below key levels, and they pop hard when it's going above. So CORZ and BitF on that, and then on the metals, I brought up Veil, and then the LTHM LAC pair, which I'm already long on.
perfect. Thank you. Yeah, I made sure
Yep.
to take those down during it.
Yeah, my bad. I know I dropped a lot of tickers. I just didn't want to be too specific because I don't think this is the type of week where you want to just make like outlandish, speculative, like this is going up or this is going down calls. I think it's all conditional.
Yeah, absolutely. That wasn't what you were telling us on Play of the Week though on Sunday.
Very true. Very
You were
true.
telling us you got to
Hey,
pick.
but hey, play of
Yeah,
the week. But play of the week on Sunday. I mean, that's it's a fun little game that we do.
it is. It is. It is. Okay, all good. All good. No worries. Okay, Joey, did you want to throw a couple names out there?
Yeah, sure thing. So, a bit of context, I'm a longer term investor, so I'm looking at that through this lens. So, I'm going to focus on two stocks that I like this year and beyond, and those names are Disney and Amazon. So, starting off with Disney, its theme parks are bouncing back big time as COVID comes to an end. So, that's definitely very encouraging. And streaming service Disney Plus is also performing well. It already has 120 million paid subscribers, and despite its subscriber growth slowing a bit as of late, Disney's CEO reiterated that he expects Disney Plus to reach roughly 250 million subscribers by the middle of 2024. So that combination of Disney's parks business coming back strong, as well as its impressive performance in the streaming industry, makes me very confident in its future prospects. And it's definitely no secret that Disney has been beaten down real bad over the last 6 months or so. So I think this does present a nice buying opportunity. And the other stock I'd like to focus on is Amazon, and I'm bullish on them for a few reasons. First off, Amazon recently increased its fulfilled by Amazon fees, and that's expected to generate an extra $1 billion to its bottom line. So that's pretty big right there. And Amazon's revenue is also pretty widely expected to increase this coming quarter due to a sales boost in its grocery, accessories, and furniture divisions, as well as a selective price increase in those areas. So, on top of that, there's also a lot of talk that Amazon might raise the price of its Prime membership in the near future. That would obviously be huge. And some analysts have that potentially resulting in an additional $3 billion of revenue. So, and those are some factors as far as revenue growth. But now moving over to the cost side, Amazon did make some major infrastructure investments last year in 2021, and this will decrease its operating costs, and that'll subsequently free up some room for additional marketing expenditures. So, another plus there. And similar to Disney, Amazon has gotten crushed over the last 6 months. So, I think you can get in at a pretty attractive valuation, and I definitely can see Amazon going on a solid run here in the coming years. So, those are a couple names in Disney and Amazon that I'm very bullish on for the coming years.
Fantastic. Appreciate it, Joey. Disney and Amazon as long-term picks. Okay, noting that down. Awesome. Yeah, and if anybody hasn't already checked out what Joey's doing, we're getting him. We're bumping up the follower count. We're getting him a lot closer to where everybody else is. Major help. Y'all who just send me, when my inbox gets flooded with like 300 DMs, and we need to get people on the calendar within 24 hours, and I'm doing like 10 hours of spaces. Joey's the guy who makes that happen. Helps out in a lot of different areas, and it's just always, offering his help, and is a really smart, intelligent guy. So great follow for y'all on here. Okay, let's keep it going. So we have made our way through all the stock picks. Don't worry, everybody. I will post those. I'll make sure everybody knows it's all conditional. And we have FOMC coming up with all those things. Once again, make sure that you are following the speakers. We're going to move into some closing comments. We'll try to just keep these to like 2-3 minutes so we can wrap up by 10 p.m. EST. That would be ideal. Let's get rolling with it. Andrew, you want to go first?
Absolutely. Thanks so much for coming out, everyone. It was awesome to be back chatting with you. Definitely, for tomorrow's FOMC meeting, just understand what time frame you're operating on. If you're on like the swing time frame, or if you're a position trader, there's really not all that much to do before the FOMC presser. Before the presser, it's a lot of algorithms just taking money from retail traders. So you'll see like a lot of false moves in the morning, like back and forth. And yeah, it's kind of a nightmare. Like if you're an elite day trader, then like that's probably your jam. You can be right in there. But in the morning you're just gonna see a lot of noise. So in the morning, a lot of times, like even just being off the desk, it's not the worst thing in the world. And as always, I think it goes without saying, just make sure your risk is under control. I've been talking to a lot of people over the past couple of weeks and months where they take a position and they lose the position, and their account is done. And I'm always like, geez, like I just find it like astonishing. So yeah, always just make sure you're sizing your positions correctly, and just looking over your trading journal and just seeing like what am I doing right, what am I doing wrong. And if you find you're not really having a ton of success in this market environment, just dial it down a little bit, especially on the position sizing, because you never want to be. I think like a good rule of thumb is like if you put a trade on and you feel anxiety over it, or you feel like you have to win it, that's where you're probably sized a little, or just way too big. So like always think of your trades as a campaign of trades. So like think about it like over this next series of like 100 trades, like here's how many I'd like to win, here's how many I'd like to lose. Think of it in that sort of way, and not really as much like just on like I'm doing one trade and I have to win this. So definitely just think about it in terms of the long game. Tomorrow we're gonna have the meeting, and it definitely is a binary event. Nobody knows how it's gonna go. So just set yourself up that way. If the market goes down, you're gonna live to fight another day, and if the market goes up, you're also gonna live to fight another day. With that being said, thanks so much for having me on, everyone, and I'll see you all next time.
Appreciate you being on. Really good stuff as always from Andrew. We are getting Andrew. Oh man, bro, we're getting close. We're gonna break you through. We can break Andrew through 9K tonight. By the way, if anybody's in the audience, he's 20 hours away. He's one of the most consistent people on here. He was like called out Apple before that huge run. He called out the SPY short before it started to dip, and a bunch of other stuff. So I recommend listen, if you like accurate stock picks, things like that, I recommend checking out what Andrew's got going on. We can get him to 9K tonight. We'll get him to 10K soon. Okay, let's keep. Oh, and for everyone that's in the DMs, please make sure. Happy to add a ton of people to the calendar. Can't wait for that. Please make sure your email, preferably a Gmail's in the DM, or just send it if you haven't already. Because some people ask you on the calendar, and I love it, but they haven't sent the Gmail, and we're just gonna have to ask again. So let's make life easy. Okay. With that being said, Vegas, any closing thoughts? Okay, Mel, would you like to go first?
Sure, no problem. Just keep it close to the hip. With a VIX this high, like I mentioned, your options are elevated. That IV will come out quickly and drain call options. So even if you have something moving favorably in your direction, if you're short dated, you're not doing yourself any favor. still think there's a lot of opportunities out there, shorter dated opportunities. We'll definitely be keeping eyes on the VIX. I'll try to join you tomorrow, Wolf, and see if I can offer any dark pool activity or options flow on the feed. I think that's a great idea to kind of take a look as it's going on. Position sizing is going to be really important. We're managing our risk, guys. We're not trying to make it this week. This is not the week where you have that opportunity. Keep it small, stay profitable. When you see green, lock in green.
Perfect. It's like that stay frosty, you know? It's just like get in, get out.
You've
Love it.
got to. Yep, that's not your money until you put it in your pocket and you wouldn't pass it by on the street.
Exactly. And if especially if you're trading options with us tomorrow, especially if you're trading with more than one contract, when those contracts go up 5, 10, 15%, start scaling. Just start scaling out, take some profit. You never know how quick it could reverse. And that should be going in seconds. Okay, Vegas, you with us?
Yeah, I'm here. I couldn't unmute for some reason. Sorry
Okay.
about that. So just want to say that tomorrow I'm just gonna go with the flow. I anticipate obviously there'll be the volatility in the market, and I'll wait until I think in the morning it'll be probably pretty calm in terms of like what direction the market really wants to go until after the FOMC information's released, and then see how the market participants respond. So, could be some hype probably around Microsoft tomorrow, maybe some IV crush on that one, but I'll be watching. And then I guess wait to see what Powell has to say, and then trading accordingly. And then, if I'm going the wrong way, I'm gonna have to cut and switch gears. And that's the method to the madness sometimes with options, especially. Sometimes, you think you're right, and then you're like, you know what? I'm actually wrong. So I need to cut this trade and then, switch sides. So there's nothing wrong with that. If you're wrong, you're wrong, and then just, move on. So I'm going to be watching, and hopefully I'll be on the right side of the fence. So I wish everyone good luck tomorrow for sure. And definitely, I'm not sizing heavy at all. I'm just, being very cautious as well, and prepared for anything. So thank you everyone for being here tonight as well.
Yeah, absolutely. And I think that goes back to, if you're going to be actively trading in this market, Stock Talk loves to say it, and I'll kind of steal the line from him, the knife wounds, not axe wounds, right? It's okay, take that small loss, set that stop, get out if you're not right off the bat. If it goes up, get out and take that profit. But if you do that consistently and you're completely stopping out of your loss, but you're taking small profit and letting some, profit run, more often than not, that's going to lead to a profitable day. And it doesn't have to be the most profitable day of your life every day. It just has to be profitable. That's kind of the key there. Okay, Juicy.
What's going on? Again, I wanted to say, thanks for having me on. Love being on these spaces. Love hanging out with the crew. But yeah, man, going into these events, you're pretty much going to hear everybody echo the same thing. Wait for Powell. Wait for Powell. And in my experiences with this, a lot of times the whole day is choppy. Even after he speaks, it's like just a sideways day, right? So I'm going into tomorrow, well, half size, first things first, dropping my size back. I do have some triggers, Facebook, Goldman, and a couple other things. If they trigger, I'm gonna trade them with half size. But I'm not looking, like Mel said, I'm not looking to try to be Superman this week, right? I'm looking at the year, the last 25 days, I've done phenomenal, right? So now it's like, is it worth me pushing the button to try to risk these profits to try to make a little bit of money? That's like you picking up nickels in front of a bulldozer, right? I'm going to wait for everything to line up, and I'm probably just going to wait for Powell unless I get, good trigger with some volume, unless Mark Zuckerberg's out here doing something crazy tomorrow. If it's something like that, I'll hit it, but I foresee myself staying cash. We'll see. But again, thanks for having me on, and be sure to follow all the speakers, man.
Absolutely. Thank you for being on, Juicy. Looking forward to chatting with you tomorrow. Okay, Stock Talk, coming to you for any closing thoughts.
I feel like my opening rant kind of was closing thoughts in a way, but
All your
I mean,
all
I'll
your
just
thoughts are mic drops, so it all kind of works across.
yeah, I mean, I'll just keep it brief. I mean, just stay nimble, and don't listen to not don't even listen to me. Don't listen to anybody on Twitter. Everybody has different opinions, and different things work for different styles of traders and investors. But and I just tweeted this just now, like, if you're asking questions to other people like, are you still holding this stock? Is it too late to buy this stock? What's your price target? Why is this stock down? Like, if you're asking those types of questions, and I'm not targeting anyone, you know who you are. If you're the type of person that's asking those types of questions regularly, it should be obvious to you that you're not ready to be trading on your own with significant amounts of capital. And I think a lot of what has happened since 2020 is that a lot of people have gotten dragged into this game, and they've put so much capital into the markets and are either bag holding and trying to make it back, or have gotten either addicted to the feeling of it or whatever it may be. Not everyone on earth was intended to trade stocks. I personally think everyone should invest to some degree, but that's a separate point. If you're the type of person that's been wrapped up in this, and let's say you had a couple great months coming out of the crash in 2020, the harsh reality is, and some of you may not want to hear this, everyone had a couple great months coming out of the crash in 2020. It doesn't make you a good trader if that's what happened. If since then you have been doing nothing but losing money, if you came into 2021 and you lost money all during 2021, and you've been losing money all during the start of this year, and you've just started investing in 2020, and all of your ideas have come from Twitter, these are red flags, and should be red flags for you individually to go back to the drawing board, to study, to learn, to develop a strategy, develop your own interests with regard to sectors, individual stocks, maybe ETFs, whatever you're interested in. But do the work. Not enough people. I mean, I talk to hundreds of traders every day, DMs, my Discord, comments, whatever it is. I talk to hundreds of traders weekly, and so many of them are having the same issues. And largely, the number one blanket solution to all of it is education and independence. And it's very easy to use social media as a crutch, and even to use Reddit or Twitter, or even maybe even personal people in your life that in real life that you're using for ideas. It's easy to do that, but it's not going to be consistently profitable, because you're never going to be able to manage the trade to the extent that those more experienced people manage it. And knowing that, you have to find a way to do it on your own. And I've said this before in the past, but I'll say it again. If you're somebody that's struggling and has been struggling with trading, whether it's this year or last year, or even for longer than that, do yourself a favor and get off social media for 2 weeks or 3 weeks or a month. And not get off completely, but get off of FinTwit for 2 weeks or 3 weeks or a month, and try to trade on your own, completely on your own. And if you realize that you can't do it, if you realize that you're completely lost, you have no idea what to buy, no idea what to sell, no idea how to monitor the markets, no idea how to gauge sentiment and sectors, and you don't know what's happening on the economic calendar. If you realize that you feel, naked and unarmed when you don't have Twitter, the chances are that you're spoon feeding off Twitter, and that you're not really trading on your own. You're just buying things that you're seeing and reacting that way. And if that is the case, then you absolutely need to educate yourself more. Whether that's learning technical analysis, whether that's learning fundamental analysis, whether that's learning about macroeconomics, whether that's learning about Federal Reserve policy, there's a million and one things that traders need to know about. And so, it comes across as easy. It comes across as just, oh, all these guys are doing are picking stocks and hitting buy and sell, but it is not easy. Like, I'll be the first one to tell you, it is not easy. It requires dedication, work, weekly watch lists. It requires working over the weekends. It requires monitoring new stocks during the week. It requires waking up early. It requires staying up through the session, monitoring sentiment. You have to put in the work or you're not going to be successful. And a lot of you are expecting to be successful without putting in the work. So do yourself a favor if you're one of those people, and trust me. And I know that a lot of people are going to hear this and they're going to say, no, fuck that. I'm not going to get off Twitter for 2 weeks. Like, how beneficial will that really be? But test yourself. The same way that a lot of kids, before they take tests when you're in school, the night before, you'll put your notes away and quiz yourself, or you'll get somebody to get flashcards and you'll quiz yourself. Same principle applies. Prove to yourself that you're capable of trading without looking at my picks or looking at Andrew's picks or Mel's picks or Vegas's picks or whatever. Like, prove to yourself that you can make your own picks. You can make your own trades. You can find your own entries and exits. Once you've done that, then yeah, come back to Twitter, use it as a scanner, discuss ideas. But until you get to that point, if you never take the training wheels off, you'll never learn how to ride the bike on your own. So, if you're one of those people that's still using the training wheels and one of those people that's still spoon feeding every single idea you ever trade, if you want to be in this for the long run, which, the harsh reality is 90% of you won't be able to trade for the long run. But if you're one of those people that's convicted and thinks you have the dedication and the psychology to do it for as a career or as a side hustle, but bottom line, if you want to do it for a long period of time, you have to be able to do it independently. Twitter is a tool, not a end all be all solution. So use it that way as a tool and use it to supplement your trading, and to scan, not to dictate what you're buying and selling and when you're buying and selling it.
Very well put. Mel, you have a comment on that?
No, I just want to, and trust me, Stock Talk Weekly is a hard one to follow. Trading is not a participation sport. It doesn't mean that you go and open an account and that just because you're participating, you are going to make money. Everything you said is so true. It's so much work. Absolutely have to put in the work. And what you will find, anybody on this panel is constantly pivoting and going against their original thesis to prove themselves wrong. If this didn't work out and I saw this, I'm wrong on the trade and I'm out. And that's so even if we're talking about something today, when new information comes in tomorrow and new price action comes to fruition, we pivot. We don't hold on to a thesis that's not there any longer. It broke down technically, the money flow is not there, whatever you're using, it just doesn't support the thesis. And each day we're working with what we have at the moment when we have it. And these picks may not work, but we pivot. We're not staying in them because we called them out on the money show on Tuesday. We pivot. It's wrong. I'm wrong. And that's okay because new information has come into the market. This is not a participation sport. You do not get trophy or make money just because you're active. You have to work your ass off. And absolutely everything that Stock Dog said, you need to spend more time learning. And this is the time to do it. When you are not able to find clarity, when all your gurus are going away or whatever you're used to following is no longer there, because some of these people are not able to make it themselves, be dependent on yourself. But you have to realize that there's the work that has to be put in, looking through different charts, looking through relative strength, all of the different sectors, all the different indices. There's not one person on this panel that didn't just spend 2 hours before we had this call going in and diving deeper. We didn't just come up with shit and pull it out of our ass just to have something to talk about. We went through charts, we went through sectors, we went through different dynamics and groupings and just everything to put that together. So I just really want to hone into on that because that's kind of the mantra, that it's just like you just show up and you can make money, and maybe that's worked for the last year, but this whole next year is going to be totally different. If you really want to survive, you've got to start looking at the markets a lot differently, because it's going to be a totally different game this year.
Yeah, definitely not a participation place. There's a lot of ways to approach the market, right? And there is that participation way where people just buy SPY, right? Buy a diversified portfolio of Vanguard funds, and they will manage that for you. And that's a retirement fund, and that's a perfectly acceptable way to do it. But if you're going to be active and you're going to trade and you're going to try to outperform, there has to be a strategy and a tactic and an energy level to it. So absolutely, Mel. Okay, Joey, take us home.
Would love to, man. So, few things. First off, as people have already said, tomorrow's going to be a crazy day with the Fed. A lot of people out there are hoping that J-Pow and the magic money printer can save the day, but hope is not a strategy. So be sure to do your homework and stay safe out there tomorrow. Second, just want to say that as usual, Stock Talk was preaching right there, and Mel definitely added on there, which was phenomenal. Trading is not for everyone. Personally, I'm a long-term investor because I know that trading is not for my personality and lifestyle. I'm also working in investment banking next year, so my trading will be restricted. But that aside, I know that I don't have the personality to be a trader. I'm very risk averse and could not handle the constant stress and pressure of losing and having to be on point every day with that. So I just know that trading is not for me. So with that said, I have a ton of respect for all the traders up here. And keep in mind that for every one of these people, for every Stock Talk, every Vegas, every Money Mel, every Andrew, there are thousands of traders who are losing everything. So please, everyone who's listening here, be honest with yourself and take the time to determine if this is right for you. And there's absolutely no shame in investing in indices and ETFs. I consider myself pretty knowledgeable about finance. I've had several internships in banking, private equity, wealth management, etc. But I have the ability and the humility to realize that trading is not for me, and that I stick to my game plan of being an index investor, investing in ETFs, diversifying, and investing in several large cap names that I believe in long term. So, yeah, with that said, be sure to know your game, know what works for you, and there's absolutely no shame in being a long-term investor if trading isn't for you. So yeah, last thing, just a big shout out to all the great traders and speakers out here. Be sure to follow them. They will really improve your timeline. And then last shout out to Wolf. Gav is really building an incredible community there. He is routinely hosting 15 to 20 spaces a week, which is pretty unreal. He consistently has the best speakers in the game out here. So this space has been running 2 hours. If you enjoy what you're hearing, there's tons more of these spaces. So again, be sure to DM Wolf with your Gmail to hop on that Google Calendar so you know when all these spaces are. So yeah, with that said, thanks so much for having me up here, and it's a pleasure to be up here with these phenomenal speakers. So thank you.
Appreciate the kind words, Joey. We know you're doing a whole lot. You're going to go very, very far. A lot of BDE over here. Okay, we're going to keep it rolling. All right, with that being said, thank you everybody who joined in tonight. We had, I'm assuming we get around 3,000 to 4,000 people come on these. We held 600 to 700 people for like most of this. I'm excited. I'm going to be getting more stats that I'll be sharing very soon with the audience in coming ones. Tomorrow, we will be on Spaces a lot. We're going to start at 12:30 p.m. EST, and we're basically not going to get off. At 12:30 p.m. EST, I will have a Web 1, 2, and 3 space, basically covering using the history of Web 1 and 2 to navigate the turbulence of Web 3. At 2 p.m., we're going to go live for the FOMC space. We are going to be doing live trading as Jerome Powell speaks. We'll be taking moves upwards, downwards, playing both sides. We'll hopefully Stock Talk. You'll be on there so we can, have some people banging the downside too with us if we're going that way. Then it's actually going to start at 2:30 p.m. The Street's going to go live. We'll join on to there as speakers. At 5 p.m. EST, I will be live with Stock Market News and Stock Talk Weekly interviewing the Chief Commerce Officer of a public Bitcoin miner, actually, and that is going to be MIGI. So you can look up Mawson Infrastructure Group. They're currently, you can see them listed on pretty much every platform. They have a market cap of 262 million. They're trading at 380 a share right now. Obviously, been a bit of a rough time for Bitcoin, but I've been working on this for a little while and was able to get their chief commerce officer on 6 p.m. EST. I will be doing a charity project NFT highlight, and then 7:30 p.m. EST back with Stock Talk and Brad, the Wolf of Weed Street, Stock Market News, and a couple of others, and we'll be live under the Bullish Rippers account for a investing in cannabis space. So basically from 12:30 p.m. until 9 p.m. tomorrow, I'll just pretty much be on spaces the whole time. We'll figure out some time to eat. I usually just make food and eat actually while on these spaces, like in between moderating nowadays. That is the lifestyle. I got my dog in my lap. Life is good. We're chilling. Love everybody who came in here. One more time, if you want to be on that calendar, all you have to do is go into my DMs right now, DM me your Gmail, join 3,500 other investors on our spaces calendar, and we will see you at every single space we do. We have literally 10 spaces over the next 2 days. So we will give you your money's worth, especially since it's free. Okay, with that being said, thank you everybody who followed our speakers. Have a great night. Hope you learned something from this. I'll post out those picks soon. Take care.